Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Hey, so we got the baby this morning just for a few moments because he woke up early. Why did you wake up so early? You have any comment? You have any comment? No? Okay, so anyways, mom will be along in a moment. She's taking one of the kids to school. In the meantime, let's go and look at the charts. So, here in the ZN, we did have a little bit of a drop later in the day in the treasuries. Again, was kind of a big move for Friday, but like it gave up that whole move. So, in fact, I think it was a counter move because there was some volume behind it. Not a whole lot over the weekend here so far, though. S&P 500. Yes, we roll over, don't we? Wait, shouldn't we have rolled over last Thursday? No matter. No matter. The futures are up a little bit overnight, though, in the S&P 500. Oil holding steady, although there are concerns that you could see more oil movement and that could be bad for everything else. Silver and gold at the bottom of their range, not doing anything too interesting. Well, I guess silver's kind of rising here a little bit. And copper getting a big boost. Not sure what's with that. I didn't read any headlines that would make me think copper would move. The dollar coming down a little bit, and Bitcoin. Bitcoin's still in doldrums and just not looking so hot. I gotta say, man, it continues to be like just a complete, oops, that's not what I wanted to do. Complete lack of activity over in Bitcoin. Not very good. Dude, you are like, when you're making me sweat, you're too warm. You're too warm. Maybe we should ditch the blanket. You want to ditch the blanket? No, you want to keep the blanket. Okay, here you go. There's the blanket. He's still tired. Okay, so now the other problem that we have here this morning is because I was messing with monitors and so forth over the weekend. Jigsaw's got the monitors mixed up, so I got to rebuild my workspace over here. So give me a second to do that. And we'll start with ZF over here in the corner. Come on. There we go. Love Aquasnap. Helps me, keep everything nice and tidy. Like it just snaps. Oh, I love that. I should just, I should do like affiliate links for them. I love that piece of software. Okay, and here's the other one. Okay. So I can see we're just below 4.3 again. There we go. I'll move this over here. Okay. I think that's everything's good there. Now the next thing is, do we have our camera a little bit too bright? I feel like we do. That's better. All right. So, next thing we got to do is come over to Forex Factory and look at the busy week that we've got coming up here. By the way, are we live and we're doing everything correctly here? Yes, so I think we're good. Okay. So, Forex Factory. Stretch. Okay. And this week, well, today is September 11th. A day that will live in infamy. No, there we go. Okay, so today we have a 10-year bond auction. Oh no, it's not today. Today we got nothing. But on Monday we've got a 10-year bond auction, 30-year on the 13th. And then we also have on Wednesday CPI, Thursday PPI, Friday Empire State Manufacturing Index, and University of Michigan Consumer Sentiment and Inflation Expectations. So for us in the interest rate space, you want down, bud? Yeah. Yeah. Hold on just a second. But to get on the live stream, he got bored. So listen, nothing too interesting is going to happen here for the first bit. I don't think. I mean, Mondays can always surprise you. A week like this, they could definitely surprise us, but I don't think we're too likely to have anything too interesting yet. So look, here's a squishy ball. What do you think of? You know? Hey, can you tell me something? Here, let me. What color is this? What color is it? It's red. No, it looks good on the camera. You see how great it looks on the camera? Ooh, yeah. He always has like this grumpy face. Say hi, like this. Say hi. 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 Do it. Hi. Hello. Hello, my adoring internet audience. I love y'all. Yes. Mwah. Mwah. Oh, there's mom. Hold on. Hold on. All right. So, anyways, busy calendar this week. Also, oh, you know what? We never turned the music on. Let's turn the music on. Close that. There we go. Okay. Oh, I also need to remove my trade controls over here. There we go. Okay, so now we're kind of in an interesting spot here, I think, with the treasuries because, well, so this week they're having the CME contest, by the way, if you're not familiar. Doesn't look like it's moved too much. I don't know. Again, I'm not a huge fan of contests because it really kind of, I feel like you YOLO it, you know? like probably the YOLO play here is go long interest rates and hope that something bad happens, because the market seems to be on the edge, like concerned that interest rates could rise here, right? But we have so much news, and you know what? I don't think that CPI will actually be that big of a deal. I do see some things that might make CPI a little bit hotter than we want. Like it'll be more closer to 0.3 than 0.2 over the next few months. But I don't see anything like super huge coming in here to be of too much concern. And so I kind of am looking at treasuries being more range bound. And so in terms of like a dominating flow that I could just latch onto and ride all week, I don't think we have that. I think we can have to play it by ear. And so I don't think that the contest that I've got a really strong edge here for the contest, at least not this week. You know, I kind of said a month ago, well, we'll see what it's like when we get there. But now that we're there, I'm kind of like, oh, I don't know if the treasuries are actually going to, I'm kind of thinking that we may continue to see volatility contract this week. We get the news, and I don't think that anything too big will happen. So that's kind of where we're at. Yeah. So I think that there's a couple of things we can look into today, though. I think that we should try and use this for a little bit of research and so forth. So let me collect my thoughts here a little bit. Let's run a commercial here. Because YouTube loves that. And I'll see you guys in a minute or two. And for those of you that have commercials blocked, you're still with me here for like a minute or two. Let's see here. Hello, Amir. Oh, it looks so there was a couple of questions over the weekend in Discord, but it looks like they all got answered. Have a nice week. I hope so. It's, you know, this is kind of one of those weeks that's set up to be big. I don't know if it will be that way, but you know, this is definitely a place where one could make some mistakes, let's say. So I got to be on my best behavior, I think. Okay. So let's check Zero Hedge, see what the headlines are. There was a lot of analysis and so forth about the markets and positioning but not a whole lot to go on for the treasuries. There is a story from Nick Timros saying that the Fed is kind of like evolving, that they're moving towards a pause in September, and then maybe they consider things after that. So I think the first thing for us to do here is to come to the Fed Watch tool and see. I believe that was already like what the treasuries were pricing, but let's just confirm here what they've got. Next FOMC meeting is in 9 days. Well, okay, the market says 93% chance that they're not going to hike in September. Is that a different if we do a comparison? Nope, hasn't really changed much at all, even in the last month. Okay, but what about, I need to make this a little bit taller. Just a little bit taller. What about if we go further out, November? So when we get into November, there's a slightly higher chance, about 40% that they hike. And then when we go to December, there's even a 40% chance that they hike in, So I actually see some opportunity there, because I don't think that they're going to. I kind of think that we've already had the last interest rate increase of the cycle. I guess we'll see, but if we have the soft landing, maybe we have to increase again, but it won't be until like next year that would happen. So I'd be surprised to see them hike in November and December, and the market is kind of suggesting, well, 5.25, yeah. So the market is kind of suggesting that the most likely scenario is that they don't, but they're pricing a higher percent chance that they might than I would anticipate. And so that could mean if we get things that, like Fed comments or things like that really strongly suggest that there will be no more hikes this year, we could see a little bit of a rise in the treasuries. So that does give us some, at least doesn't give us like a flow to necessarily follow, but it does tell us something about the market that you might not be able to tell just from the price, right? US confirms it seized nearly 1 million barrels of Iranian oil allegedly en route to China. Qualcomm shares jump on new chip deal with Apple. Good point. There has been a bit of up and down in the Japanese yen. It's mostly been to the upside today, though. Well, somebody bought Twinkie. I remember when there was this whole thing about Twinkie. Good times, good times. That's all the news stories over there. Okay, now let's go down through Twitter and see if we got anything. Oh, there's Futures Trader 71 talking about how to make your continuous data adjustment. Financial Times noticed a key sentence from the People's Bank of China. We are capable and feel confident in keeping the renminbi. I can't say it. I have in my head how it's supposed to sound, but I can't get it to come out my mouth. the exchange rate at a reasonably stable level. And here's the key part. We will act when we act, resolutely correcting one-sided speculation. And then Brad Setzer says, seems like a threat to intervene directly, not just to lean on the state banks. That's true, because the way that it's been working, I think, is it's been the banks, right? What's this from the market ear? Obesity is the mega theme gift that keeps on giving? Obesity is the new AI. Time to track who is talking obesity on the earnings calls. The chart shows the S&P 500 HC companies who have referred to obesity / GLP-1 during their 2020 earnings calls. Wait, I'm not 100% sure what GLP-1 is. I think that this is a story I haven't been following, so I should probably do some research here. Okay. A class of drugs called glucagon-like peptide, or GLP-1 agonists. The second class of drugs that may lead to weight loss and improved blood sugar control is the sodium glucose transporter 2 SGLT inhibitors. These include canagliflozin. These are a type of class 2 diabetes drugs that not only improves blood sugar control, but may also lead to weight loss. I see. An LLY, that's a, oh man, what is their name? There was some controversy there recently, right? Eli Lilly, just over vaccines and stuff, I think. A long Eli Lilly short PFE setup has generated 90% returns year to date, and the gap between these two stocks is continuing to widen. Lateral read across. Morgan Stanley outlines how the biggest theme in healthcare now is making its way into the consumer. Morgan Stanley estimates a 20 to 30% reduction in daily calorie consumption as patients cut back on food intake across most categories and eat 20 to 40% fewer meals and snacks. The proprietary U.S. calorie model points to a 1 to 2% headwind to calories consumed by 2035 from the growing adoption of anti-obesity medications. Oh. So they're saying that it will cause people to eat less, and that will actually affect markets in ways. Interesting. Not too much over the past day, though, on Twitter. Yep. Anthony Crudelli, rollover has never been a good time for me to trade the indexes because it's less about the technicals, it's about the trades that have to get done. It increases randomness because order flow comes in at random times to roll over contracts from one month to the next. Expect a very busy morning tomorrow night before the open as the December contract comes in as the main contract, and many orders may have to be done before the open. Really? Well, I would say that in terms of cumulative delta, it's a relatively busy day. There are about 5,000 net contracts long in the S&P 500. Volatility has been pretty contained for the last hour, though. And definitely over here for the treasuries, so... Anthony Crudelli's got a lot of followers. 182 hearts on that one. I don't understand. How do you become popular on Twitter? Do I want to be popular on Twitter? Maybe I don't want to be popular on Twitter. You know what? Forget about it. We can just let's just keep doing what we're doing and ignore Twitter. Oh, and here's Nick Timrose tweeting about the Fed that I mentioned earlier. Fed officials are turning more cautious about raising rates too high now that inflation is finally showing signs of the rapid declines that they've long anticipated. A rate pause in September will give the Fed more time to see if recent progress continues. Well, that does present it as like a, yeah, okay, everything's going according to plan. We don't need to raise rates in September. And not, it's a change or anything like that. Okay. Forbes magazine, the best of the worst ways to manage layoffs. I don't know if I really want to get into that one. Crude, brother, you want to talk about oil? I mean, we've been talking about this a little bit here and there, but oil's been on a tear rate lately this summer. You can see here from the chart, that's a pretty solid uptrend. There has been a little bit of consolidation over the last 3 days or so, but at the moment, most of the analyst reports, analysis, etc., seem to point to oil getting up to $100 a barrel. And we may, as of yet, see crazy headlines in that area. Now, the thing is that right now it seems like inflation is kind of subsiding. But if the price of oil ticks up here and that starts to carry over into other areas of the economy, then you could get into a world where like the treasuries and oil tick like almost tick for tick. In fact, according to Zero Hedge in a story I read yesterday, break evens are more closely correlated with oil. So that seems to be the forecast. I don't know if like you buy at 87 right now for the long haul, like if it's really worth it or how you would work that out. When I looked at the options, and I haven't looked into it that deeply, but just like my initial brush over it was like, this isn't worth it for an options trade. Because the market already seems to be anticipating that the price will slowly rise as there's more demand than output because of the output cuts from Russia and Saudi Arabia. So You would think, why doesn't it just go right there? Well, it's because the orders have to come. People have to buy it, and the buying has to overwhelm the selling. And so you can run into these situations in commodities where you have a really, really solid chance or a really solid idea that prices are going to increase, but they don't go right there. It's kind of an interesting thing about commodities, right? And that's just from them looking at the supply and demand and like saying, what's the supply and demand going to be like, at all of these next places, and adjust accordingly. So, yep. We got to keep an eye on oil. I don't think that I need to pull the DOM up, but we'll have to keep an eye on oil. Hasn't been too instrumental yet, but it's getting there. Of course, if that does happen, will be interested to see how it affects the political landscape, because, I wouldn't say it's just Joe Biden. The Democrat Party, liberals around the world aren't doing so hot politically. I think the best example is in Canada, where by a almost 2-to-1 margin, millennials are favoring the Conservative Party over the Liberal Party. And everybody keeps telling us, millennials are so conservative and they're staying conservative, and there will never be shifts in political affiliation among millennials. Well, I think that what's happening in Canada kind of suggests that that's probably too simple. I think that if you're a millennial, you can't buy a house. You've got to be sitting here thinking, the things that are making housing expensive are all things that Democrats do, right? They limit what you can do. They want more regulations that make it more expensive to build a house. I think they were saying, the guys in Canada were talking about Toronto specifically, and they were saying that it takes almost a year to get all of the appropriate permits and so forth to be able to build a house. And that almost doubles the price of it, or the development costs. It's crazy how much just those local zoning laws and things like that can affect the price of a home. So if you're a millennial and you want to get into a house, do you think that the Democrats are going to get you into a house? I don't. I think that, this has been 15 years in the making. It's basically been our entire adult lives for millennials, our entire adult lives, that it's been this way, and it's kind of been going in this direction. Not that Republicans really push this issue or say that they're going to change it, but it's kind of starting to show the way. I would expect if Republicans are smart, that they'll make a shift. If Donald Trump really wanted a boost, he would make the switch. He would say, we're going to make housing affordable again. That would be an easy win for them politically, right? So you're already see that. If the price of oil starts to go up, will you see the political winds shift even further in favor of Republicans? You could potentially see that. Especially since, the thing that I think will really hurt them is that Biden released the oil from the SPR, right? Kept releasing oil from the SPR. Now there's basically nothing left to release. He's out of ammunition, I feel. And I think people are going to be upset that they did that, and then we'll have to refill it at higher prices, right? I'm not seeing too much on Twitter this morning, except for Jordan Peterson is tweeting a lot for some reason. He's tweeting about how socialism will kill you. Oh, but he points out something interesting here. He's retweeting Wesley Yang. The percentage of young adults who said that a college degree is very important fell to 41% from 47%. Only about a third of Americans now say they have a lot of confidence in higher education. You know, that's what I would expect, but I'm shocked that the numbers are that dramatic. Bernie's tweets inflation interest rates won't bring down inflation when it's caused by external price increases. Costs for petrol, diesel, heating, and production will all go up again as oil-producing countries laugh at the West. Oil price to rise to 9-month high on worries about tight supply. And Jordan Peterson says, "Oh, oil crisis on the..." Okay, Petey, you don't know what you're talking about. It's happening. It's not a fake crisis. It's a manufactured crisis, manufactured by Saudi Arabia and Russia, but it is not a fake crisis. It's going to be a real problem. Anyways, curious, maybe not. Treasury's still kind of sitting here. They have been moving around a little bit. I mean, overall net down. Nothing too dramatic, of course, but and it kind of looks like a flattener again. I mean, overnight it's been a little bit of steepening, but it looks like they're flattening again. It makes me think of the contest again, that it's like, is the play go long the 30-year? What do you think? Let's see here. I'll make a poll. Start a poll. YOLO weekly play. Long 30, short 30. Let's not do the 30. Let's do UB. Long UB. Short Z. What do you think? So, if we're going to continue flattening, but interest rates pull up, so we get a bull flattener, which is kind of what we've been having a little bit lately, then you would want to buy the 30-year, right? Conversely, if we were having a if we were having a bear flattener, then you would want to go short the 2, right? And then kind of the opposite way. So if we think that interest rates are going to steepen and treasuries move up, interest rates go down, then we want to go long the 5. And if we think that it's going to steepen, but the treasury is going to go down, like interest rates are going to rise, but they steepen, which is probably the most unlikely situation, then I think you sell ZB or UB. So I think from my position, I think that the short UB one is probably like the one that makes the least sense. Which maybe makes long UB a good play, but then it still depends on, are we going to move up or down, right? So you go long UB, that means you think that the curve is going to continue to come up. Tough call. And furthermore, I'm not sure that you take that play, that you actually make or lose that much money for it to be up in the contest, you know? I should also add that so far this morning, I would say that the pressure has been more to the sell side. There has been a decent 7,000 contracts or so worth of selling, at least here in ZN. The other two contracts aren't doing anything, but in the 10-year, they are selling it. Oh, I should fix my background here. Get a little more color in there. I'll leave that pull up. So only one person. So no, 2 votes, and you're both along UB. Whatever it is that you get, whatever it is that you say, by the end of the stream, we'll put it in for the contrast. Okay. But I'll leave it up until the end of the stream. Though the day not so much more. No, not yet. I mean, we got a busy week ahead of us, so I don't think that you'd see too many people super anxious to make any moves in the treasuries. You're definitely seeing stuff going on in ES because it's the contract rollover and everything. They've been pretty active overnight here. So I think that there's definitely some people doing stuff over there, I guess you could say. What's this? Janet yelling today? I'm thinking, oh, she's thinking about September 11th. Don't worry about it. Don't worry about it. Nothing important. Financial Times forecasting inflation with AI. Ooh. Let me read this one. Okay, yes, I think so. We promise we're not jumping on the bandwagon and turning this site into a AI bill. This is from the Financial Times Alphaville, by the way. They're trying to go for a lean towards 27.5 and see what happens. Yeah, that could be interesting. I mean, I would say it's net selling, but it's not actually moving. So I think that there may be some flows selling in ZN, but that like the overall rates complex doesn't want to move yet. There's a legitimately interesting working paper from the St. Louis Federal Reserve on 2023's hot topic AI. Miguel Faria y Castro and Fernando Laibovici have used Google's large language model PaLM to produce prospective inflation forecasts for 2019 to 2023 and compared them to the predictions of the Philly Fed's survey of professional forecasters and actual inflation prints. Our benchmark results suggest that large language models generate conditional inflation forecasts with lower mean squared errors than the traditional source of forecasts, the SPF, for the period of analysis, which runs from 2019 to the first quarter of 2023. That doesn't surprise me because there was a huge bias in the forecasts for 2023 because of political pressure, I guess. Not only are the large language model forecasts better when evaluated over the entire period, they are also better for almost all of the individual years in analysis and forecast horizons. While the focus of this paper is on the year-over-year growth rate of the Consumer Price Index for the US, the methods that we study can be applied to virtually any time series of interest, such as measures of real economic activity or geographically disaggregated measures of inflation. The researchers used Google's PaLM because it is trained on data that is constantly updated, and because Google lets academics use it for free, which is fair enough. But given that it has access to the internet, how do you prevent it from cheating and looking up actual inflation data? Castro and Laibovici pretended that today was a certain point in the past and forced PaLM to only use information up to the given date. I'm a little skeptical of this study because of that. Here's the prompt they used. Assume You are in T. Please give me your best forecast of year-over-year seasonally adjusted CPI inflation for the US for T, T plus 1, T plus 2, T plus 3, T plus 4. Please give me numeric values for these forecasts. Do not use any information that was not available to you as of T to formulate these forecasts. Can we do this? Palm Google. Okay. Palm is our next generation, blah, blah, blah. What can it do? It can do stuff. Coding, blah, blah, blah. I use the Palm API. I want to, can I use Palm Google? The fastest way is to use the API. Yes, but I don't want to code something at the moment. It's an article using Python. I would have thought that there would be a spot that would like allow me to try it. But okay, so you can sign up, get $300 in free credits. I guess I'll have to try that. What data provider are you using? I use Rhythmic. So my broker is EdgeClear. I'm using Jigsaw Day Trader as my primary platform and Rhythmic as my data. I kind of have a little weird setup though, because I use like an old, a slightly older version of NinjaTrader that allows me to connect to Rhythmic. Most people might, you know, like if you're using NinjaTrader, you're probably on NinjaTrader brokerage, and then you have to use CQG, right? Have you tried Bookmap? Yeah, you know, I'm not a huge fan of it. Like, it's a good platform, it gets everything done, but I feel that you're paying extra for features that really don't benefit you a whole lot. And the DOM in Jigsaw is better. So that's why I use Jigsaw. Now, they do have this thing where you can like, you can look at the markup by order data, which will make certain things a little bit more accurate, but for what we do, it's kind of splitting hairs. You know, if you had an algorithm, then maybe it would matter. Biggest challenge is ensuring Palm wasn't cheating given that it has internet access. They did so by asking questions linked to current events to see what it knew. For example, with prompts like answer the following question, pretending today is January 1st, 2020. Is Queen Elizabeth II alive? It turns out that Palm is a bit of a loyalist and then it answers the question correctly. We're ultimately limited in extent to which we can fully address these concerns given we have no control over the corpus of data and tokens that are used to train the data. Well, the way that I would be testing it is I would ask the question today, say, pretend that today is September 11th, 2023. What is the 1 year forward inflation? And then a year from now, ask it the same question again and see if it gives you the same answer. And if it doesn't give me the same answer, then I have reason to question their method, right? Because it kind of, now you could do the two ways, because you could say, okay, just tell me for today and do that walking forward for a year or two. And then maybe the ones that it gives in a year from now are slightly different. And how do you know what that is? Is it because it's trying to read the future using information from the internet? Or is it because the language model is just kind of changed and the data sources have just kind of changed? Interesting, though. I hadn't spent too much time asking large language models questions like that, because ChatGPT basically, prevents you from doing those sorts of things. So if Palm lets you do it, then we should try it. Apparently I can get some free credits, so maybe I'll try that today. Oh, wow. Thousands of old wind turbine blades pile up in Texas. Man, look at that. That is quite the picture. I don't know if that's actually like a huge deal in the larger scheme of things, but it sure is an impressive picture. Should have stayed in bed, says Octave. Yeah, probably. No, I'm glad that you came in here because you can answer the poll. What should we do for our YOLO weekly play? Go long UB, short UB, long ZT, or short ZT? And right now, long UB is winning with 60% of the votes. You say short ZT? So you think, basically you think that rates are going to continue to move up and flatten. Yes. So yeah, it's because it's an interesting question, because basically, which one of those you pick is whether you think rates are going to go up or down, and whether you think the yield curve is going to flatten or steepen, right? So as of late, let's come back to our chart here. ZN. So as of late, there was a little bit of steepening through here and here. Then there's been some flattening, right? So flattening and interest rates going down, like from here through this period, through this period. You're right. Short ZT would have been the winner, right? Through this period, though, through this period, long UB would have been the winner, right? So I think that you guys have the plays right at the moment, that long UB and short ZT are the ones that make the most sense. That the one where we move down but we steepen seems unlikely. The one where we move up and we flatten also seems unlikely, because when we've been moving up, we've been steepening. So long UB or short ZT makes the most sense. But then doesn't that make it that kind of suggests that we do think that it's going to flatten? Doesn't it? Oh, that now what? Now I'm confusing myself. Wait a second. How is that working out? So long UB or short ZT, that's the flattener. Long ZT would be, we think things are going up. No, yeah, so I think it's actually, okay, so I'm not sure that the short UB one works, but the long ZT one maybe makes sense. Basically, interest rates higher and yield curve steeper is probably not going to happen. If interest rates decline, then probably it's probably rates decline, or not rates decline. Yes, these move up if these are going up, and then if it's down, it's flatter. When you do these sorts of things in your mind, you could say it's easy to get yourself all mixed up. Long UB is up and flat. Short UB is down and steeper. Long ZT is up and steeper. And short ZT is down and flatter. So the two that are winning right now, long UB and short ZT, both suggest flatter yield curve. So it's really short. The short UB one, I think, doesn't make as much sense as the long CT one. You guys don't seem to agree with me so far, though. More sticky inflation because of oil is my thought. Well, I think that that's a good play. If it was like over the next 6 months, then I would be totally with you, right? But over the next week, this is only for the week. We open it today, we close it Friday. Maybe there's enough room in this week for that to play out. But we also have 2 auctions and CPI and PPI and University of Michigan consumer expectations or consumer sentiment or whatever it is. And I don't know if any of those will actually matter. Did you see what Biden? Well, yeah, they're canceling the oil leases, and a lot of people are upset about it. So I'm kind of concerned that long UB actually is maybe the right way to play the curve because we're likely to flatten, but that's the losing side of the curve, and that really actually you want to be short ZT. That if you thought you were going to be, they were going to steepen, that this one makes more sense, right? I think they have some position limit rules, though. Hold on. Oh, that's right. Participants can only hold a maximum of 10 contracts per product at any one time. So, if we're going to go for this one, we'd probably need to do a little bit in the 2 and a little bit in the 5, huh? Has there been a time here? Yeah, okay. Beginning of August. So basically, if something happened so that I think maybe this one doesn't make sense. So hold on. So if we were going to say the thing that mattered the most was which direction are we going to go and which way is the yield curve going to go, and we decided to trade based off of that, then that would be one thing. But the other issue is that you're only allowed to have 10 contracts per product. So if we're only allowed to have 10 contracts per product, trading the 2 and the 5 maybe doesn't make as much sense. Like the best situation that you would get is if the treasuries all moved up and we flattened, which I don't think has happened recently. No, I don't think it has. If the treasuries, if we were to get a bull flattener, then based on our limitations, that would give us a chance to make the most, right? But the way that it's going instead, I kind of feel like you've got to, well, I don't know. So, Pickles has already made $10,000, huh? Probably these guys are just like net long or short something, though. 10% already? How is that even? I don't know, man. That's crazy to me. That's crazy to me. That must mean they were short. But like, if you were just to look at for today, for instance, I guess if you wanted to go full margin, you could just bet on the overall. Are we going to move up or are we going to move down? Right? So if we think that if rates are going to increase, then we should probably go short, 2, 5, 10, and just, keep going out until we've used up all the margin. Right? I don't know. It seems to me that there's some strategy behind that. There's probably a strategy possible within here that we could do that would be beyond me, though. Some things to consider with our YOLO trade. So can I edit the poll? It's interesting that you guys still favor long UB, though. See, any kind of, if I just did like a yield curve trade, any kind of trade there would be like you would just reduce your net leverage, right? Well, the people that are on the top of the leaderboard here have trades in both, in wide variety. ZT, UB, CB, all of them. So 4K bid in ZN? Where do you see that? Oh, at 20, yes. Well, the S&P 500 is buy-in for the moment. You see my concern. I want to put something up respectable for us here on this challenge, but the way that I trade is just not normally something that's gonna like maximum profit, right? So I don't think that I'm unlikely to win. I'm really surprised that these guys are already, some of these people are already up 10% though. Like, what the F? That kind of puts me off on even wanting to try. Although the person at the top there, Pickles, that sounds familiar. Doesn't that sound familiar to you guys? Is that one of you guys? Tesla could be carrying the market too. That's actually a really astute observation, Peter. Because there was, what was it? Action from Morgan Stanley, I think an analyst upgrade of some sort. Tesla has been up, and that's probably supporting the rest of the market. Yeah, I think you're probably right on. I also think that there are some flows related to the rollover, but those aren't necessarily explicitly going to be like bullish or bearish, just flow. Apparently, there's some new hope with LK99 that a new paper will reportedly verify the superconductor. Dude, on Reddit, there's this subreddit called Fluent in Finance, which is really what it means is I'm not fluent in finance, but I want to be. I see so many like really naive things posted over there. Well, there's the treasuries pushing down there. So another option is just go short UB. That's what it is the short UB in terms of like the direction and the curve and everything doesn't necessarily make sense. But if we want to go short treasuries, long interest rates, it might just make sense to go short UB in order to get the most leverage, right? I would say that overall net ZN has been selling today. So, or what it's worth. I don't know. Well, it's tough because I'm not sure that interest rates are going to rise. I mean, we're seeing them rising a little bit right now, but I'm not convinced that like the CPI and PPI are going to be like higher than expected or anything. In fact, I actually think that they might be a little bit easier than expected. But then the other thing that you got going for you on the short side is that supply. Like the supply last time around, it did affect markets in the end, and they were probably only able to really absorb that supply because of some of the headlines that were happening at that time that did end up being bullish for treasuries, right? So, you know, this time around, if you're not getting that sort of a thing, those auctions could end up being the deciding factor that pushes us lower. It's an iceberg at 21.5. Man, I tell you what, it looks like they may just go like straight for that liquidity at 20. Adjust my camera there just a tad. There we go. I don't know, 4K iceberg now at 21.5 and on a Monday. The 30-year is selling there now too. Not as much in the 5-year. So are we getting some steepening? We may be getting some steepening. We're getting the bear steepener. This is the one that I thought was kind of like the least likely. Now it's 7K at 21.5. This is I was not expecting. Are you still wish you had stayed in bed, Octavius? Let's see here. What is this from Nash? Okay, trying to finally get this all together to master this as I mainly focus on trading ZB, but I know depending on the yield curve, it may not be the best to trade every day. So if the yield curve is flattening, but bonds are moving down, then the trade is the 2 or the 5. Yes. If the curve is steepening, that the bonds are rising, no, you still want to trade the 5 or the 10. You can also focus on the curve with respect to the driver. If it's the central bank, the 2 or the 5. If it's inflation, the 5 to 10. If it's auction / macro, it depends. Oh, really, alligator? That's interesting thoughts. By the way, there's a 4K offer there at 22.5. You know what? Because I'm feeling dangerous this morning, I'm gonna try joining this iceberg. Oh, that's right. This is the ECB on Thursday. I didn't get filled, but they did tick up. You joined the iceberg? Well, then we'll see. Oh boy. Huh. So, a little bit of iceberging at 22 as well. Although they did make it go offer there. You know what? It's been an hour. I should go to a commercial break for YouTube's sake. I'm always blaming YouTube, but I have this theory that YouTube will promote the stream more if we do commercials. I was thinking they put that 4K lot at 23 just to remove it, and we have a good reverse. That's the idea. See, it's the 4K is still down there. I think that 4K offer may have been, it may have been like a spoof. But when they ticked up there and I started seeing it iceberging at 22 as well, I was kind of like, well, I don't know if that 21.5 will even ever get filled, so I probably better take the opportunity now. Okay, it goes offer again, so we'll see. No, ad break. We'll be right back. This is somebody that posted a live link on our Discord. And you know what? If they had like participated before, if they had been participating before, then I would totally have let them do it. But because they But because they just tried to put the link in right away, I'm not. Nope. Not allowed. Oh, this guy's got a book map and a bear head. Okay, come on. Is this gonna fill? Okay, there's a lot of volume in here, isn't it? In it. Oh boy, Jordan Peterson generates millions of YouTube hits for climate crisis deniers. That's definitely gonna kick. That's definitely kicking the hornet's nest. By the way, with this iceberging down here, we've been down here for quite some time now. I got a good spot on line 21.5, but I don't know if they're gonna fill me. Oh, and in fact, they go bid. Well, these ones, you know, when I'm just messing around, these are really fun, but under normal circumstances, this sort of action would really stress me out because it makes me think like, oh, there's something going on. There's something going on, guys. Well, maybe there is something going on, but it doesn't necessarily mean you can take advantage of it. I don't know. I may, as of yet, still get that first tech. I'm reading this story about Jordan Peterson, climate crisis deniers. And the first comment is, I think Jordan Peterson is a perfect example of someone who spent too much time on social media and basically broke because of it. I think I would agree with that statement. It's when I look at him on Twitter, it's like he comes and he tweets like a bunch of stuff like one after when he's on, like he's tweeting, man. And that's always the thing that I think. You know who else? Like Bitfinex, I think he spends too much time on Twitter. Love the guy. I think he's overall he's right. But he tweets too much. Yeah, there you go. Full on reversal. Yeah, it's a good point. It is a full on reversal. And maybe a little bit of a flattener too. Came more in the long end of the curve. You still have the opportunity to change your votes. 15 votes. 60% still long UB. Oh, I'm not a fan of. So I honestly do not watch other people's stream. You know, this is so ironic you stream, but I don't sit down and watch streamers. But it's pretty hard for me to sit down and just even find the time to listen to a guy stream. But TikTok started showing me a lot of Destiny because he said something on one issue. I don't remember what it was, but he said something that was like, yes, this is clearly a person that he's kind of more on the left, but he understands what's going on right now, right? But the more clips that it started to show me, the more that I was like, this guy is an absolute cock and a loser. And well, it would have been a better trade if I had gotten the original tick, because if I had gotten the price that I wanted by joining the iceberg, and then, you know, I had just used that other contract to just give myself a little bit more room, maybe I would have let it run and I'd be taking it off up here at the top end of the range instead of just taking a tick from it. I was long and was debating to add it the iceberg, really? No, I'm not more. I'm a conservative. The thing is, though, is that I'm a conservative that is concerned primarily with empiricism is the first side. So I really do not like the far right in my party that everything is a conspiracy theory and nothing is based on evidence. I just can't stand that. You know, like the whole QAnon stuff. I remember watching that, and I was arguing with guys on Reddit, on the Donald subreddit, about it all the time. Because I was just like, dude, this is so obviously a hoax. It's so obviously a hoax. But today has been great so far. To make a read off of often when I see something big like that, I try and avoid it, right? But my calculation was this has been really slow action, and that's a really large iceberg, so it's probably going to mean revert. Yeah, but that's the thing is Destiny says that he dislikes the far left, the socialists, and the communists, but in many respects, he is far left himself. It's kind of an odd, but it's just like any individual person, is going to be their own thing and doesn't necessarily fit into a box. So you can't necessarily put him into a box. But like, I think the ones that I was seeing most recently that I disagreed with him on the most were, he was on these podcasts and stuff where they were talking about relationships and so forth. And he was taking the full on, left wing view of dating and gender relations. Like, he was trying to justify why he wasn't a cuck, even though they have an open relationship. Yeah. Because I'll tell you what, it's kind of a fun, we don't talk about it here very often just because it's not really relevant to what we're doing most of the time. But one of my most strongly held beliefs is that the largest source of problems in our society today is that marriage stopped being about raising children. That's what I really think is the source of all of the problems that we're having today. Because, like, especially in the dating market, like, why is the dating market so messed up? Well, okay, so you go on Tinder. You go on Tinder and you're a guy and you swipe, and you can swipe right on almost every girl and like you won't match because the girls are getting like tons and tons and tons of matches, right? And so they can afford to be super, super picky. And in this world where, you know, like there's infinite number of options, you know, that can really mess with you because that's just not the way that our brains are designed to work. We're designed to pick the best suitor among like 20 different people, not amongst millions of people, right? Well, the thing that kind of balances out our instincts in that case when there's only 20 people is that ultimately you want to get married and have kids, right? So you can't stay in the dating pool forever if you want to have kids. It's like you start getting into your late 30s and it's like you're running out of time because by the time you're 40, it starts to become let's just say that after 40, the risks in pregnancy are a lot higher. Okay, like you're more likely to have Down syndrome child, things like that. Okay, so you want to have kids, you probably want to start doing it before you're like 35, 40. Right. And that's kind of the balance, right? Is you have to go in. So in Utah, when I was on Tinder, didn't have the same problems that everybody else is talking about. I mean, part of that is, you know, I'm a little older and I have good income. But, you know, I'm not particularly good looking. I didn't have a problem getting matches. And I went on like 3 dates a week with new people almost every day. And why is it? Why is that different in Utah? Because women want to get married and have children in Utah still, more so than anywhere else in the country. And that's what makes Utah unique, right? So these problems really originate from turning marriage as an institution for the raising of children into something that is like for personal fulfillment or something like that. And that's where everything gets messed up. Oh, when you make the institution about your personal fulfillment, a large portion of the population makes selfish decisions. Who would have thunk? So I'm pretty conservative in that respect. The other thing that I look at, I saw this, it was on Zero Hedge, but I don't remember where they were getting it from. But they were showing childcare costs. Which states had the highest childcare costs and which states had the lowest childcare costs. By the way, who had the lowest? It was Utah, because there's a lots of there are plenty of people willing to look after the kids, and there's less people that actually need the childcare, and so the demand is a lot lower, and that's why the cost is so low in Utah, and at least in my opinion, right? Because Utah is more about having kids than anywhere else. Well, man, in some of these places, it's like, okay, you want to have double income so that you can afford your house or whatever, but then you're spending so much money on childcare costs that you're only at, you know, having two people working only increases your income by like 10-20% instead of doubling your income. Like it's super crazy, right? And then on top of that, because you got more people working, just like wages are lower in general. So like, has it helped you? Has it helped us as a society? Well, I'm sure it helps the people that own the stocks. I appreciate it when you make my stock higher, you decrease the cost of labor. But for individual people, is this whole experiment that we've been on over the last like 100 years or so of, you know, have both parents work and let the state raise your child? Is it really actually working that great for you? I say no. So yeah, I'm very, very conservative in that respect. It's just that on the other side of it, I understand finance, right? And a lot of the things that conservatives want to believe, like that we should go back to a gold standard and things like that, just are based out of ignorance, in my opinion. You're the one person that voted to go long ZT. Well, would that have made the most money, though? Maybe. You would have gotten another and more ticks out of it. It looks like you would have gotten maybe one or two more ticks out of it. But the play is, yeah, the play is okay. So because some of you guys might not have caught it. So when I say long UB, short UB, long ZT, short ZT, it is 10 contracts, because they put the limit is 10 contracts. So I think you're right. I think that if you want the most leverage, that you should just go long or short UB, right? So long UB, the one that was like the overwhelming favorite so far, if we had taken that before the end of the session, we would definitely be up right now, wouldn't we? By the way, despite us being right up there at the highs, there's a little bit more iceberging on the bid again at 26.5. In fact, the way that played out is really interesting, because it kind of looks to me like somebody wanted to buy it down here, and so they said, okay, I'll come and I'll meet you. Sold it, then kind of bought it back up, and I hope that guy made money, but, you know, and then the people that, you know, there was so much activity in there that then the rest of this was like everybody getting squeezed and stuff. But that's, given the context, a pretty wild move. Pretty unusual move for like a no news Monday ahead of tons of high pressure news events. Yeah. If one of the ones on the ZT, if long ZT or short ZT won, then probably what I would do is like do 10 long ZT and 10 long ZF. Something like that to kind of make up for it. With UB, I think that we should be able to just take 10. Well, we might be able to do 10 UB and 10 ZB. I mean, I don't know. I could like restart the poll. You want us to restart the poll now that we've had a little bit of time to discuss it? Let's try that. Start a poll. YOLO weekly swing trade or CME contest. Poll is back up. That gives us an hour to put them in. Let's come in here. Morgan Stanley upgrades Tesla. Says Dojo supercomputing effort could unlock 10 trillion TAM. Be careful what you wish for. Goldman confirms new good news is bad news regime. Slowing inflation and growth is just right, supported by the Goldilocks view of the world that Goldman noted has been questioned recently by the market. However, after the strong pickup in investor sentiment in quarter two, which led Goldman's risk appetite indicator to a year-to-date high, equities have been relatively flat over the summer, as Bloomberg's smart money flow indicator has showed a major de-risking. Goldman notes that the market narrative has been dominated by shifts in global yield curves. G4 yield curves bear steepened for most of the past 2 months. In other words, short UB. No, that's not what's happened. Well, okay. I don't gloss over that part. As markets started to price a higher chance of U.S. soft landing and reassessed global bond term premia in the face of higher supply, the fiscal outlook in the Bank of Japan's yield curve control changes. Oh, that's the other one. The bear steepening rally reversed since the peak in 10-year yields on August 21st, and the U.S. yield curve bull steepened last week. Still, 5-year real rates are near the summer peak at the start of this week, with S&P 500 valuations still extremely elevated. However, last week or so, as real rates pushed higher still, valuations have started to show cracks as too much good news dominated any soft landing narrative and sparked renewed fears of inflation and a less dovish Fed higher for longer. It's so good, you know, like the way they're going through that, because I think this is a good explanation of the way things have been going over the summer. It really is like they've gone from like one completely opposite narrative to the other so quickly, and it's like we've got like 3 different ways that this could turn out, because it could be Goldilocks and growth continues. It could be too good and interest rates go higher and that destroys the economy. And it could be that we're already falling into recession. Goldman Sachs' Andrea Ferrario wrote in a note over the weekend, good news from growth has been bad news for markets as a result. Indeed, while the correlation between U.S. macroeconomic surprises and our PC2 monetary policy factor has been negative for most of this year, the same correlation with our PC1 global growth factor has turned negative since the start of the summer. With fading recession risk, there's a risk that good news on growth will trigger more hawkish repricing of rates if accompanied by stickier inflation. This could ultimately weigh on risky assets given risk premia are already low. Translation, be careful what you wish for. So overall, the net read on that story is that Zero Hedge is warning against things getting too good and interest rates rising here. And that's the real question is, what do you get over the next week? I don't know. Okay, well now that, only 2 of you have voted, but you're both favoring the short end of the curve so far. What is size on Dwayne? Oh, I didn't see that. Where are we relative to... To be honest, I'm still kind of favoring UB. I think that the data might be a little bit weaker than we anticipate. I need 2 more votes here. I'm just gonna ignore you guys and overrule you. Go long UV. S&P 500 selling pretty hard here at the moment. We're down about 20 points already. What about, there has been a spike in the oil. Although, that started before all of this reversal and everything. Might have been part of some of the downside that we did see in the treasuries earlier. Definitely was. So maybe the reversal has to do with oil having come back on that. Bitcoin also taking a dive. A breach of last week's lows, in fact. I'll pull up the chart here for you for a moment. So we'll see if they can hold it. So far, they haven't been able to hold below the 25,335. But we are seeing a strong sell coming into Bitcoin. It looks like this buyer here in the treasuries is a pretty strong one. But looking at aggregated open interest and liquidation for Bitcoin be nice. So in the past, I think that kind of information has been somewhat useful, but I don't know if, because, you know, so when you look at things right now, there's just a lot of people long in Bitcoin. Like that's the thing is I just see so many people long Bitcoin and like holding out hope. And so I really feel that if Bitcoin were to drop too much further, like let's say below 2,500, that you could start to see some ugly stuff. And the way that it's kind of been acting and the way that I've been seeing the chatter on social media really strongly suggests to me that there's some possible negative headlines out there in the near future. Like, I think one of the things was that today was like the deadline for Binance to respond to the SEC complaint. If they fail to respond, then the SEC would be able to start digging through them. Well, yeah, if you can see open interest live, there's some evidence to suggest that you can utilize that information to get better trades. So somebody did a machine learning model with that it showed some success in the silver market in China. So ugh. This is turning up pretty strong. Like they haven't broken that high again quite yet, but like the pressure is still there. It's too hot in this room. I shouldn't put my arms up. You see my sweaty pits. Shouldn't I don't know why it's so hot in here. So there's another one that I want to put out there. It's a big news week. I wouldn't typically expect there to be a lot of activity on the Monday before that, as like everybody's would just be kind of waiting for the news to come through, right? Which would mean you'd see really tight action until Wednesday. This trade that we've got here was relatively large given the action. It could be somebody making a bet on the overall week. A bet that maybe we want to follow. We shall see. So how much is there going to be there at 27 if they try and clear that? 2,000? Okay. It's not a big deal. I'm just reading through Reddit, seeing what else we might be able to find today. Today I learned how early Bitcoin millionaire Jared Kenna lost his love for crypto after losing his Bitcoin twice. Wow. That's how it's going to go down, right? Garlic Coin's going to take off one of these days. And then, even though I basically, I created a wallet and then saved the keys away in a place that nobody will ever find them, not anywhere on the digital world, somebody will somehow still crack the wallet and take it all. That's what'll happen to me. By the way, I haven't been over there. Let's I haven't looked up their price in a while. I'm sure it's probably not doing so well right now, though. If Bitcoin overall is not doing so well. Well, it's still a cent. Oh, it's actually, there's been a slight spike lately. I was at 2 cents at one point here. And then it seems kind of like there's resistance at 2 cents, though. $26.5 goes out for as well. Kind of suspecting that whatever kind of meta order there was is over with. So if the trade really is long UB, I don't know, it's equal long UB and long ZTZF. Interesting that you guys are favoring the long the treasuries, though. So I think we can come in here. Hold on. Trading challenge. Access your dashboard. Oh, do I have to? Am I not allowed to trade it until I've gone through those courses? I can trade on the simulator. I've done these before, though. You think I can just clep it? Let's do it. Let's clep the course. Okay, test your knowledge. The 3-day delivery process for the Treasury futures includes intention notice and delivery. Da, 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 da. I'm accredited. Cool. Next. 2 of 8. Oh my gosh. Okay. True or false? A futures contract specification defines the terms and obligate. True. I think it's more than that, but next. Get the node the cheapest to deliver. Okay, which of the following are ways to calculate the cheapest to deliver security? You want the implied repo rate. There you go. So because this one, bond with the lowest price or the lowest that changes. Which one that is changes, and sometimes it's a bond with the lowest price, and sometimes it's about. It kind of depends on where we are in relative to, like, because we're using an implied rate of 4% or something like that. So it changes. That's why you have to look at the repo rate. How can you measure risk? DVO1, duration, blah, blah, blah. Test your when measuring the basis point value of any treasury product, it is critical to perform this measurement on the cheapest to deliver. That's true. Okay. Notes and bonds are priced in fractions, not decimals. I guess in the futures they are. Correct. 7 of 8. Basis point value and dollar value are all terms referring to the financial change of a security to a change in a 0.01 change in yield. True. A parallel shift in the yield curve increases long-term yields more than short-term yields. Well, no, a parallel shift should mean that the yields change equally across the board, right? Ah, there you go, false. Da, 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 da. I got a certificate. How's that for you? Okay, now I need to go back to the trading challenge. Access your dashboard. Does it tell me now I've done that? Yes. Okay, so now I have to do the SOFRs. This one I might not be able to clap. Let's see. Begin course. Test your knowledge. Which of the following are applicable to the 3-month SOFR futures contract? The contract trades in IMM index points. The final settlement prices will be determined by daily compounding of the overnight SOFR rate covering the actual day count for the contract's interval. The basis point value is equal to $25 or all of the above. Oh, geez, I don't know any of those things. I think that it is $25. Arithmetic average of the daily SFR. Okay, it is all of the above. Okay. Clearly, I need to go and do this course. CME term SOFR reference rates benchmark is a daily set of forward-looking interest rate estimates calculated and published for 1 month, 3 months. True. Oh, here we go. SOFR futures are cash settled, aren't they? Yeah. I thought so. What is the IMM index when the SOFR 3 month is 1.19? No clue on that one. $98.81. Assume the SOFR futures are trading at 97.5 and then proceed to decline to 96.5, which the following are true. Expected rates have gone up by 100 basis points, right? Oh, yeah, there you go. Oh, did I not get them all? Did I accidentally skip one? Yeah, I think I accidentally skipped one or two. Test your knowledge. SOFR stands for secure. Yes. Cash settled. Correct. Oh, there's two questions, I see. If the realized compound SOFR rate for a 3 month SOFR is 0.9, the final cash settlement is... It was this one, right? No. This one. Okay. Each basis point move is $25. Yay! Refresh. Okay. Understanding SOFR futures. All of the above. Two of 15. 15. Okay. Federal funds. CME FedWatch tool can be a valuable instrument for those managing risk or hedging against changes, and of course. It's like we came all the way back though. That's good. It says I already answered this one. Oh, I see. Okay, cool. This one is actually the SOFR and the other one combined. That's weird. Interest rates are sensitive to the economy's true. Euro dollars and forward, blah, 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 blah. Euro dollar futures pricing closely reflects 90-day T-bills? No. Oh, of course, FRA market in 3-month ICE LIBOR. But I don't know what FRA is. One of two. The difference between implied yields in the FRA market and the euro dollar are large enough. The result will be an arbitrage opportunity. Yay. Convexity bias. Yes. Longer-term instruments usually exhibit greater convexity bias. Convexity bias is more pronounced in what? Longer-term instruments, medium-term, or short-term? I think it's going to be longer-term ones, right? There you go. In other words, you tend to flatten them, right? How far into the future does the CME group offer euro dollar 3 months, right? No. Roughly 10 years? Oh, really? Well then. I'm a monkey's uncle. The FOMC meets 8 times a year to discuss monetary policy changes, review economic financial conditions, and assess price stability. That lesson was long. We've already done that one. Let's come back up here. Oh wait, I already did the convexity bias one. Oh, there's one of 3. Euro dollars will register the saved $25 price movement regardless if the futures move up or down a basis point. True, I guess. To fully appreciate the convexity bias, one must understand that the euro dollar market closely prices with the forward rate market. For a given upward or downward change in interest rates, euro dollar futures will move up or down by the same amount, whereas FRA instruments will move differently for both A and B. I think it's both. Yeah, there you go. What is SONIA? Oh, I have no clue. SONIA is a risk-free rate developed by the Working Group of the Bank of England as an alternative for RFR for anchored transactions. SONIA was recommended by the Working Group in April 2017 as the preferred RFR and has then been focused on how to transition to using SONIA. Secured overnight interest at something. SONIA rate for a given London business day is published at 9 a.m. on the following London business day. True? Okay. The MPC SONIA futures contract and the quarterly IMM SON futures contract both follow the same interest rate interval date configuration. I don't know. True. Yay, certificate. Okay. Refresh. Yay. We are now eligible. Now what? Trade plan. What's this? Plan your trade and trade your plan just got a lot easier to do and review. Risk parameters. Cool. Types of markets. I can't do both. Okay, fine. Momentum. Risk reward ratio 1-to-1. Use stops. No. Markets. Oh, wait. That's not what I want. I just want all of the interest rate markets. Okay, submit. Your trade plan has been updated. And then what does it tell me? It doesn't tell me anything. Well, that doesn't make any sense. Oh, okay. Here's the challenge account. Here's the challenge account. So this is what I wanted to see. Okay, it was like, okay, so if we come in here, Ultra Chi Bond. Okay. Oh, there you go. Trade. Okay, limit order 125.28. 10. Oh, it doesn't tell me? Site isn't. Oh, bye. There you go. There we go. Margin committed to trade 66,000. Okay. So let me cancel that. Now let's go to the 2-year. If I say buy 10 of these, and that's 12,000. So even if I took 10 ZT, 12.6, 12.6, and I also took this one. $14. Yeah. So technically I could do one in the 30, the 2, and the 5. I guess we're going to do all of the above. You got 20 minutes to vote. Well, there's 20 minutes to vote. No, I don't think you get 20 minutes to vote. I think I'm just going to do it. YOLO! You only live once, guys. Submit. Okay. Why do they want to know all of that? Oh, I see. This is like my defaults. Okay. They're making me follow best practices to like put my note, you know, make notes on what I'm doing and all that stuff. And by okay. Okay. So now when we come into my positions, okay, both are filled. And my margin is 79.2. So can I add... let's add a 5-year note here too. There we go. Okay. Well, it's going to stop me out of positions pretty quickly here if it doesn't go back up. It's funny that as I was doing that, it went down a tick. So if I max out the margin, what do you think the simulator will do? Will it just bail me out of all of my positions and call me a failure, or what do you think it'll do? I guess we'll find out. Man, why is my AC not turning on today? I hate how Samsung tries to force updates on you. It is hot down here. It's like 70, probably like 74 in this room. It's actually ticking around quite a bit here in the 10-year. Starting to feel a little fuzzy all of a sudden for some reason. Bitcoin not looking so happy. It's going to new lows there. Oh, new lows in Bitcoin. Financial Times, EU downgrades growth forecast and raises inflation expectations. September 9th, Tether redemptions of USDT on Ethereum basically dropped to nil after March 8th when Signature Bank, whom we know Tether had opened accounts, was collapsed. After this was pointed out, redemptions restarted, but then over the next weeks, those redemptions were, quote, unredeemed. Tether has an on-chain redemptions that weren't actually redeemed. This is scandalous, and in my opinion, calls into question its entire financial integrity. Oh, that's what called into question their okay. An immediate audit of their financial history is required, or they need to be shut down by law enforcement. This is getting redonkulous, yeah. Oh, it says Joseph Wing. Policy is slowing other economies via rising debt service costs and a reduction in available financing, but the U.S. has been more resilient. Other banks may need to cut first. This suggests that rate differentials will widen again in the dollar's favor. Oh, that is interesting. Which could provide support for us over here in the treasuries. Anyways, I'm looking for why is Bitcoin falling? Surely there is a headline, because when it starts, falling off the cliff like that, there's usually a headline. This is MicroStrategy to release quarterly updates on Bitcoin holdings, ignoring impairment losses. That's not doing it. More than 10 likes, let's say. That's not enough. 20. How about 100? Not helping. I don't know. I'd like to know what's going on, but it looks like pickup. Now, wheat is getting creamed as well, by the way. Treasury is still where they were, too, by the way. I'm going to end the poll. You got... oh, no one. The 8 votes. It is the same result, so I think that we're okay on that respect. Guys, interesting day. It's been a long time since, well, I take that back. It's actually been quite recently that we've seen, like, there's an iceberg there and, like, they immediately reverse, right? That's actually probably the 3rd time in as many weeks that has happened. But kind of in slow action, because usually a big iceberg like that is not, you can't tell. Tomorrow will be odd because you got a 10-year auction, right? So we'll see where they go from there. Yeah, I'm not necessarily feeling my best either, but... So, what should we put in for today's title? Why Monday and a busy week? Not that people will click on that title, but that will help me find it if I ever want to go back and find a day like this, right? So, hey guys, thank you. Had a good morning. I will see you guys tomorrow. In the meantime, stay excellent.